markets are the thermostats of modern-day economies. If they crash, there will be crises that will affect the nations, which informs the reason why they must be guarded with the requisite regulations that can boost investor confidence. Welcome to Thursday, July 2nd, 2020 edition of the WebTV Market Review, and we have an interesting lineup for you this morning. We'll give you a roundup of corporate results, annual general meetings results and discussions. The Securities and Exchange Commission proposed new rules for collective investment schemes, the FMDQ debt securities market activities, and also developments in the bonds and fixed income space. Let us begin with a roundup of annual general meetings, corporate stories, and results that we have at the moment. EcoBank Transnational International ETI, the parent of the EcoBank Group, the leading Pan-African bank with banking operations in 33 countries, concluded its 32nd annual general meeting and an extraordinary general meeting in Lagos. For the first time in the history of ETI and in line with preventive measures to curb the spread of COVID-19, attendance at the general meetings was mainly by proxies in accordance with the Articles of Association of the company. EcoBank Group Chairman, Mr. Manuel Ikazabo, said, "We are in the final lap of our 5-year roadmap to leadership, having laid and achieved much improved business and operational foundations. Leadership in digital products with scalability, strong corporate governance, and continued expense discipline. We continue to focus on making substantial strides towards ensuring a return on equity above the cost of capital across the group, despite the challenging economic conditions, especially with the COVID-19, whilst also maintaining our commitment to driving economic development and financial integrations across Africa." According to Mr. Kazawa, that AGM was his last, and he has completed his tenure as director and chairman. What remarkable leadership under his tenure, and one of those very, very transformational board chairmen that will be leaving the board. Also note that Lappa Africa PLC, which is also quoted on Nigeria Stock Exchange, chairman, Mr. Bolaji Balogun, also conducted his last annual general meeting as chairman. Great leaders leaving the show, and we hope that subsequent chairmen will continue with that steering leadership quality. Mr. Ade Ayeyemi, Chief Executive Officer of EcoBank Group, in his part, said, "I must first and foremost pay tribute to our outgoing chairman, Mr. Emmanuel Ikazabo, who has served the group diligently during his tenure. On behalf of management, I extend our immense admiration for the invaluable stewardship, counsel, strategic expertise, and oversight that he so willingly provided. I also seize the opportunity to congratulate and welcome on board our incoming chairman, Mr. Alan Nkoncho, and look forward to working with him as he leads the board." For Mr. Ayeyemi, the 2019 financial year was that of substantial progress for the group on multiple fronts as it broadened the innovative product range with upgraded core banking application platform, increased customer numbers, established new partnerships, and initiated programs to transform customer experience and embed desired conduct, culture, and ethics throughout the organization. Each of the 3 business lines of ETI improved their profitability and positioned EcoBank for sustainable long-term success. Shareholders were pleased with ETI's progress in 2019 and approved all the resolutions at the AGM, which included the election of 2 new directors, Professor Enase Okonedo and Mr. Simon Donor. Professor Enase Okonedo will replace Ms. Aruma Ote, who you all know was the former Director General of the Securities and Exchange Commission, VP and Treasurer of the World Bank, who has resigned from the board. Shareholders also ratified the co-option of Mr. Deepak Malik, a nominee of Arise BV, Ms. Zanel Munadonko, the representative of ECOWAS Bank for Investment and Development, as directors. The mandates of the firms Deloitte and Touch, Nigeria, and Grant Thornton, CA Côte d'Ivoire, as joint auditors were renewed. Interesting stories from EcoBank Transnational International ETI. Let's go to some results that we have at the moment. The Initiates PLC, quoted on the Nigeria Stock Exchange, released its first quarter 2020 unaudited results for the period ended March 31st, 2019. The key highlights we have is that the revenue declined by minus 11% to 162 million naira from 181 million naira in the previous quarter. Profit before tax declined by 47.6% to 11 million naira. Profit after tax declined by 47.6% to 7.5 million naira. Net assets grew by 1.2% from 894 million to 905 million naira. Let's go to Smart Productions Nigeria PLC, also listed on the BOAS. It released its 2019 audited results for the period ended December 31st, 2019. And here are the key highlights. Revenue grew by 4.5% to 45 million naira from 43 million naira in the previous quarter. Profit before tax declined by 47% to 8 million naira. Profit after tax declined by 54.1% to 5 million naira, while net assets declined by minus 1.4% from 91 million naira to 90 million naira. In the tech space, eTransact International PLC, also quoted, the Nigerian Stock Exchange released its first quarter 2020 audited results for the period ended March 31st, 2020. Here are the key highlights. Revenue grew by 5.8% to 5.9 billion naira from 5.6 billion naira in the previous quarter. Loss before tax stood at 183 million naira, while loss after tax stood at 183 million naira. Net assets declined by minus 59.5% from 307 million to 124 million naira. Pharmadeco PLC in the pharmaceuticals released its first quarter 2020 unaudited results for the period ended March 31st, 2020. The key highlight shows that revenue declined by minus 15.4% to 91 million naira from 108 million naira in the previous quarter. Loss before tax stood at 87 million naira. Loss after tax stood at 87 million naira. Net assets declined by minus 6.6% from 1.3 billion naira to 1.2 billion naira. Corn oil, quoted on Nigerian Stock Exchange, also released its first quarter 2020 unaudited results for the period ended March 31st. And here are the key highlights. Revenue grew by 7% to 38 billion naira from 36 billion naira in the previous quarter. Profit before tax declined by 20% to 383 million naira. Profit after tax declined by 20%, which saw to 260 million naira, while net assets grew by 1.3% from 19.5 billion naira to 19.7 billion naira. In the insurance space, Sovereign Trust Insurance released its first quarter 2020 unaudited results for the period ended March 1st, 2020. The key highlights here we have shows that its gross premium declined by minus 8.4% to 3.7 billion naira from 4 billion naira in the previous quarter. Profit before tax declined by 11% to 207 million naira. Profit after tax declined by 11%, that's 275 million naira, while net assets grew by 3.5% from 7.8 billion naira to 8.1 billion naira. Nigerian Aviation Handling Company, also known as NACO, released its first quarter 2020 unaudited results for the period ended March 31st, 2020. The key highlights we have is that revenue declined by minus 3% to 2.55 billion naira from 2.63 billion naira in the previous quarter. Profit before tax declined by 7% to 212 million naira. Profit after tax declined by 13% to 160 million naira. Net assets grew by 2.4% from 6.6 billion naira to 6.8 billion naira. Still looking at the pharmaceuticals, May and Baker Nigeria PLC released its first quarter 2020 unaudited results for the period ended March 31st, 2020. The key highlights here are that revenue declined by minus 2.1% to 1.8 billion naira from 1.9 billion naira in the previous quarter. Profit before tax declined by 68% to 62.9 million naira. Profit after tax declined by 68% to 42.8 million naira. Net assets grew by 6.7% from 5.5 billion naira to 5.9 billion naira. And just to let you know, we'll continue to give you updates as the corporate results come in, the WebTV Market Review. Let's look at some regulatory developments. The Securities and Exchange Commission has brought out new rules around the collective investment schemes and amendments. And these are proposed rules that will guide the operations of the CIS and mutual funds. Let's look at new rules. Proposed new rules on general rules for collective investment schemes. It covers proposed new rules on annual supervision fees for collective investment schemes. Proposed new rules on payment of administrative charges for review of supplemental deeds and amendments to sundry agreements. Under the sundry amendments, there are proposed amendments to Rule 465D and E, content of a trust deed. Proposed amendments to Rule 497, investment by collective investment schemes in unlisted securities and additional disclosure. Proposed amendments to Rule 517, amounts to be underwritten, and Rule 519, time amount underwritten, which is to be made available. The proposed amendments to Rule 522 covers valuation reports, and all comments and inputs from this proposed regulations and guidance should be forwarded by email to the Secretariat, Rules Committee of the Securities and Exchange Commission. That website, that space or email to send it to is rulescommittee@sec.gov.ng. I repeat again, rulescommittee@sec.gov.ng, or by letter addressed to the Director General, Securities and Exchange Commission, not later than 2 weeks from the date of that publication. So calculate 2 weeks from now, and you need to really get on board to connect with that. Note that according to Margaret Ogbonlao, who we interviewed yesterday, we interviewed her from the FSDH Asset Management. Asset under management in mutual funds at the moment is 1.3 trillion naira. Hopefully, these regulations working out will enable CIS deepen its space. Let's look at the debt securities market. There is renewed confidence in the Nigerian debt capital market as Dangote Cement issued a total of 250 billion naira in debt securities on the FMDQ Securities Exchange in 6 months. Dangote Group of Companies, through its subsidiary Dangote Cement PLC, has raised a total of 250 billion in debt securities within the first 6 months of 2020 from its recent debut 100 billion naira Series 1 bond under its 300 billion naira bond program, which was 150% subscribed, to its earlier 150 billion naira commercial paper notes Series 13 to 16 under its 150 billion naira domestic CP issuance program, all listed and quoted exclusively, respectively, on the FMDQ Securities Exchange Limited and Exchange and its platform. In the same vein, and in support of the market's development efforts and initiative of the FMDQ Group, the assets of the Dangote Cement bond are also lodged with FMDQ's wholly owned Central Securities Depository, FMDQ Depository Limited. Interesting sights from what's happening in the debt market. Now, note that the Nigeria Stock Exchange, second half of this year will be very critical as we look at demutualization. This has been discussed over time. My co-anchor, Mr. Boson, on this program tells us that this has been something that we've been singing and emphasizing for over 2 decades. Now it's happening. And second half of the year will be very critical to seeing how the demutualization process takes shape for Nigeria Stock Exchange. But we just want to go on a break where you will get insight into demutualization. And when we return, we'll take on stories around the markets. And also, just want to let you know that it's very important that we understand how demutualization will really be a game changer in the market. Demutualization is very critical because when you look at Johannesburg Stock Exchange, for example, which is demutualized, it is Africa's primed exchange, creating value, deepening liquidity, and enlarging the capacities of the market. You know that Johannesburg Stock Exchange is among the top exchanges in sub-Saharan Africa and has also, based on its demutualization, created huge values across the exchange. And also Morocco. Morocco is another exchange in the Middle East and North Africa axis MENA that is demutualized. It is creating value. Casablanca exchange is also demutualized. And Nigeria is now on that verge of joining the league of demutualized exchanges. We will get to that. We'll get to that insights as we go on the break. But let's go on to a very interesting development. Amidst the pandemic, we are seeing companies issuing and investing and raising bonds. And just this last week, Monday, 29th of June, 2020, Nigeria Stock Exchange listed Lappa Microfinance Bank's 6.2 billion naira bond to reassure the investing public of its commitment to provide a platform for issuers to raise capital even in the toughest of times. Lappa is a leading microfinance bank. And speaking on the listing of the 6.2 billion Lappa bond issue, the CEO of Nigeria Stock Exchange, Mr. Oscar Yema, said the NSE is resolute in its commitment to be a trusted business partner to all issuers in assessing right-sized capital and achieving their strategic business objectives. In our efforts to fulfill this mandate, we have achieved all-round increased efficiency in terms of competitive pricing structures, increased turnaround time, enhanced customer experience, and improved time to market. Lappa Microfinance Bank is a pro-poor financial institution committed to the social and economic empowerment of low-income households through provision of access to responsive financial services on a sustainable basis. The institution was established in the late 1980s by government program that was in the administration of General Ibrahim Babangida retired. And we had the likes of Chief Olufalaye, who was former Minister of Finance then, the likes of Dr. Kalu Idika Kalu, Minister of Budget and National Planning then, and also the likes of the then Director General of the Mass Mobilization for Socio-Economic Recovery, Professor Jerry Ghana, emphasizing and giving Nigerians the awareness on the Structural Adjustment Program, which was a drive from the International Monetary Fund and Bretton Woods institutions for Nigeria to begin to structurally adjust its economy and explore how it develops. SAP is one story that will continue to understand what happened and how it affected our economic trajectory, and that was why, at the period, Lappa was established. In 2010, Lappa MFB, that's Microfinance Bank, obtained the approval of the Central Bank of Nigeria to operate as a state microfinance bank, and in 2012, it got an approval as a national microfinance bank. Over the years, Lappa MFB has emerged as a leading institution, delivering a range of financial services to over 1 million people in Nigeria. Now, Lappa is an interesting story, and for those of us that follow global microfinance banks, Grameen Bank is a model. I mean, in Bangladesh, Professor Mohammed Yunus, an economist, developed Grameen Bank, and that won a Nobel Peace Prize Award for empowering rural women and transforming the lives of people in Bangladesh. So Lappa has come on board to deepen its base with that 6.2 billion naira bond. Now let's look at the fixed income and bonds market in Nigeria. It's very interesting to see what's happening. And from Zcrest, published in ProShare, let's begin with the FGN bonds. Yield on FGN bonds still dropped yesterday, despite a short slowdown in market activities in a drab trading session. There were more bids across the curve, but wide spreads made trading a tad difficult. The 2035 saw more action. By the close of the trading session, trading around 10.05%, while other maturities coasted around the market opening level with their bid offers staying wide apart. Consequently, yields compressed by 3 basis points on the average across the benchmark curve. We expect market activities to pick up as local investors seek to invest their OMO maturities coming in today. That's Zcrest speaking on the FGN bonds. Let's look at the Treasury bills. The OMO bill space saw very little activities as the market remained one-sided. That was bearish throughout the day. I mean, yesterday was really bearish. The SOMO demand interest was seen for the short-dated papers, especially that of the 20th of August 2020 bill in particular, which was offered at 3.80% levels. Zcrest in his analysis said there was improvement in offers on 25th May 2021 at around 5.50%, although very few volumes were consummated. The benchmark OMO curve opened and traded flat for most of the trading session, with only the 11th of May 2021 paper compressing slightly by 5 basis points day on day. The national Treasury Bills space stayed flat for most of the trading sessions as market participants looked to the outcome of the primary market auction scheduled for yesterday. At the auction, the Debt Management Office successfully rolled over 88.86 billion naira as anticipated, while dropping stop rates by an average of 17 basis points across the three tenors on offer. Demand remained heavy at the auction, especially for the one-year paper, which had the highest bid to cover ratio of 4.19 amongst the three tenors offered. Zcrest expects to see most of Treasury Bills activities in the NTB space as local investors pursue to fill the unmet demand from the primary market auction. Let's look at the money markets. Money markets dropped significantly yesterday by 20.36% despite the less robust system liquidity. This may have been attributed to lower funding needs and the option available for banks to remain in the SLF window to sort their funding gaps. The OBV and the OVN closed the day at 11.80% and 12.90% respectively, while system liquidity is expected to close at 133.67 billion naira. Zcrest expects rates to drop further today as inflows from the expected OMO maturities estimated at 88.6 billion naira is credited into the system. Let's now look at the foreign exchange market. The FX market traded a very hushed note as closing rates across all the market segments remain unchanged day on day. Liquidity remained very low in the I&E FX window as the market stayed fully on bid side throughout the trading session. Note that the I&E FX window needs much activity, and the Central Bank of Nigeria is being looked up to in terms of driving that process. Last activity there, as we reported earlier, was in March. That was from the Economy and Politics Analysis. Now, let's look at the Nigerian sovereigns. And there was slight demand, according to Zcrest, for the Nigerian sovereigns, albeit skewed to the tail of the curve, with more aggressive bids seen across the sovereign papers, with most of the market interest on the 2047s, that's the year 2047, and the 2049s. Consequently, yields compressed by an average of 6 basis points on the benchmark curve. Conversely, the Nigerian corporates were slightly bearish, with improved offers seen on most of the tracked papers, particularly for the ETINL and 24s, which dropped by 3 basis points day on day. Still speaking on demutualization, it's a very, very critical development that will be monitored from WebTV. WebTV covered the extraordinary general meeting, court-ordered session, and how that plays out becomes very, very important for the economy particularly, and how this phase is transforming the market. So second half of the year will be some very interesting time to see how the demutualization process takes effect from the Nigeria Stock Exchange. So to get further insight, the president of the Nigeria Stock Exchange, Otumba Abimbola Ogunbanjo, gives a brief perspective on what demutualization is all about. He's always talked about the fact that it's going to be a game changer, it's going to deepen liquidity, and it's also going to enhance market activities. For the outgoing acting Director General of the Security and Exchange Commission, it is an opportunity for the market to expand its frontiers. And of course, the SEC, now with the new leadership under Mr. Lamido Yuguda, would have to work out managing, regulating it as a listed entity, and also engaging it as a self-regulatory organization. We also heard from Mr. Bola Jomale when we featured him on the show that the Nigeria Stock Exchange, when demutualized, would list on the OTC, NSE OTC. That's something we also look forward to covering and bringing to you. Very interesting times for the Nigeria Stock Exchange, and we'll be monitoring those developments and activities. But let's get on to second half of the year. Very critical, the expectations from stakeholders as the new Director General of the Security and Exchange Commission is expected to assume fully and come on board to give leadership to the capital market. From my perspective, I expect that second half of the year, most likely between this month or latest early next month, we should have the Capital Market Committee meeting. Note that for this year so far, we've not had the Capital Market Committee meeting, which is a gathering of regulators, stakeholders and key players in the capital market to discuss the trajectory for the market, direction it should take, and regulations and other developments. We can deploy technology. I mean, webinars are being organized, and I believe that technology can be leveraged. We can have a webinar format secured where the DG can engage all parties, not necessarily having that normal gathering that they do have in Lagos. And if there's need, key players can be at the venue of that meeting and align with the protocols for COVID-19, and others can attend digitally by following the whole process. So I expect that the Capital Market Committee meeting should hold this month. It's very important because July is always a very, very critical period to shape the second half of the year. So I'm saying this to the Securities and Exchange Commission. The new Director General, Mr. Lamidi should take this on board, convening the Capital Market Committee meeting. It's long overdue. We understand the challenges that COVID-19 pandemic has brought to the whole capital market ecosystem. We also appreciate the efforts of all players from Nigeria Stock Exchange, the FMBQ Securities Exchange, the NSDOTC, down to even the FX Community Exchange, who have all been carrying out the operations amidst the pandemic, leveraging digital platforms. So leveraging digital technology is also key to conduct this CMC meeting. And second on board is improving market surveillance. We expect that Securities and Exchange Commission will deepen its market surveillance, ensuring that it brings the market's confidence effectively to investors. It continues to spread its tentacles to ensure that no action that can undermine the market hits the entire ecosystem. Every step taken to guard the market must be explored, and engagement need be with government, with all related agencies, must be strengthened, particularly the Economic and Financial Crimes Commission and the Independent Commission for Corruption and Related Offenses, ICPC. Also, the need for investor education is very important, and we expect that the Lamido Yuguda-led SEC will continue to strengthen the activity of financial literacy and investor education. It was nice to see the work and growth of the capital market studies, which is going to start at the secondary level, and that is very good for students at the junior secondary level to really begin to understand the capital market. Investor education should continue to be at the front burner of the activities of the Director General of the Securities and Exchange Commission. Also, the commodities market must be supported. They are very key in driving our agro process. And when we talk about agriculture being a driver of economy, commodities market play a key role. So we expect that the new Director General of Securities and Exchange Commission, Mr. Yuguda, will continue to support all the infrastructure and lead the pack in terms of ensuring that this market thrives. We have FX operating. We also need to see Nigeria Commodities Exchange, particularly in Abuja, work very effectively, and the Lagos Commodities Exchange come on board to continue to drive value for farmers and all the key players in agribusiness in economy. We also need to see more innovation encouraged, and this is going to the new Director General of the Securities and Exchange Commission to ensure that this roadmap that was launched last year for fintech, for the capital market, is happening, is functional, is effective, is giving all the support needed, because fintech provides an opportunity for deepening technology and leveraging inclusion in the market. Note that post-2008 financial crisis, we lost a lot of retail investors. We need to get them back on board, and that is very important. And on the second tranche, millennials are very key. Nigeria's population is over 65% in terms of demography that are under 35. And the current analysis shows that this population are not investing in the market. That's not too good. This is a time to encourage, through a regulatory framework, incorporating millennials to invest in the market. And that is an important aspect for the new DG of SEC. Also, gross capital formation is very important for Nigeria at this time. We are limited in terms of financing and funding and liquidity, and we see sometimes exploring borrowings, even the domestic market. But we also need to deepen the space for the capital market to be able to be a driver of capital formation to finance issues like infrastructure and other projects. And we expect that the SEC, under the leadership of Mr. Lamido Yuguda, will take that on board seriously. These are very critical times and will require proactive steps in leading the market. We know that the economy is facing a challenge, considering the twin effect of the oil price crash and the health crisis, public health crisis, coupled by the COVID-19 pandemic. but driving a vibrant market, creating investor confidence, and also ensuring that all investments in the economy or in the markets are protected must be top priority for the Lamido Yuguda-led SEC. And most importantly, defaulters must be brought to book. We need to see those who try to manipulate the market, those who try to rig the market, and those who are involved in activities, unscrupulous activities, undermining the market, brought to book. This has been the pride of markets like the American markets, where you see SEC time to time bringing defaulters to book. This is something IOSCO takes very importantly, the global supervising body for all regulatory commissions across the world. And this is something that Mr. Lamido Yuguda must also take seriously on board. And we believe that this is a good window for Nigeria to deepen the markets. SEC must be at the front burner of national economic planning. The capital market should be at the mainstream of government strategy and planning. And this is once again sounding what we keep saying over time. The capital market should be leveraged for the state assets like Nigerian National Petroleum Corporation, major other companies under the state purview, state-owned enterprises, to be liberalized to the capital markets. When that is done, we bring transparency, we bring governance, and we bring direction, and investors can key into those opportunities. Those are very key issues, and we hope that the new SEC leadership will take this on board and continue to provide direction that will inspire and spur investor confidence. That is very important at this time, and that's a note. Now, a note to all our investors this period. When we're in a crisis or when we face pandemics, there is a tendency for people to swoop on and take advantage of your funds. That is why we must take the warnings of SEC seriously around people who are developing what we call Ponzi schemes, who are not registered and regulated. Please avoid them, particularly to the millennials. Blockchain, cryptocurrency platforms that are not regulated are a risk. And when you put in your funds, you're taking a risk. Let us follow the guidelines and the warnings from SEC and ensure that we put our investments and monies in what is regulated and registered. MMM is a lesson. We lost over 11 billion naira according to the National Nigerian Deposit Insurance Corporation. Why do we want to lose billions again when we have an opportunity to invest in what creates value? There are the mutual funds, which have asset management of 1.2 trillion naira. There are other opportunities in the market, which in the course of this program we always want to bring to your purview. Please avoid putting in funds in what is not registered and what is not regulated. And in this period, that fund should create value for you. Please take caution, because this is not a time to waste funds that would have created value for you. Interesting times ahead, and that's been going to be a very interesting discussion in the course of this week. Now, let's just let you know that tomorrow we'll be looking at the half-year 2020 developments in the capital market, and of course, outlook for second half of the year. You don't want to miss that discussion and conversation on the WebTV Market Review. So we call it a wrap for our development, but let's just, I'm just happy to tell you that we want to just take a view from that discussion around demutualization. You want to just hear this game-changing experience come to Nigeria Stock Exchange in the second half of the year. Why, you hear much about demutualization, but you need to understand in just few minutes what it brings. Just listen.
Let us understand what demutualization is all about. It is the conversion of a limited by guarantee corporation to a limited by shares corporation. We will be operating as a public entity now, a for-profit public entity. So the first thing that is going to happen, and the first transformation you're going to see, is the decoupling of membership rights and ownership rights. They're going to be decoupled. So prior to this demutualization, you had the only members were the daily members and the ordinary members. Now that is going to be different. So when you operate as a for-profit entity, the first thing that you're going to see is that you're going to see enhanced performance. You're going to see competition. You're going to see deepening of the market. You're going to see foreign investors looking at the Nigerian Stock Exchange to invest in. You're going to see flexibility in the products which we give. So there are numerous benefits that we're going to get out of the mutualization.
I think.
Welcome back, and now you understand what the mutualization is all about and why it is being described as a game changer for the capital market. That was Otumba Abimbola Gobanjo, President of Council, Nigeria Stock Exchange. And we will be monitoring and covering all the developments around that demutualization experience for the Nigerian Stock Exchange. Call it a wrap today on the WebTV Market Review. Note, the capital market is a driver to the economy. If we do not make the capital market thrive and grow and expand as it ought to, then it also affects the economy. And whatever happens in the economy has an impact on the capital market. That is why WebTV Market Review is a program you don't always want to miss by 10 a.m. every morning. Call it a day and also join our website, www.prochng.com, to watch our videos with our news reports and analysis. So we come your way again. Thank you for watching. Have a nice day and stay safe.